Hey, it's Mac with PriceActionTradingSystem.com, and it's Monday. It's March 21st. This month is rapidly passing us by. I got a couple of emails. If you were looking for chart lessons for a couple of days last week, there weren't any because I took a couple of days off. So I normally mention that in the previous videos. So I'm guessing those people didn't see the previous videos. But yeah, if you don't see one, you know, if I do one, they're going to be there, so you will see them. So if there's not one there, probably means that I'm on vacation or something came up and I couldn't do one that day. But feel free to drop me an email if you like. But generally, if there's not one, that's going to be the reason. But pretty bland day. We traded up for most of the trading day. We opened 8:30. We opened right in here. You can see we're kind of range bound. Notice what's happening here. Prices are above the EMA, below it, above it, below it, above it, below it, above it, below it. Um, Really, from about 11 o'clock on, still we weren't above it the whole time. We're above it. By the time we got below it again, so really from 11 o'clock on, it was pretty much uphill until right at the 2 o'clock hour or so. But my point being that when prices are swinging back and forth above the EMA like that, it's a range day. Even if there's a slight downward bias, as there was here early, or a slight upward bias, as there was here later on, you can still trade these kind of days both ways. Generally, prices will swing from one end of the range to the other. And temporarily, we had a little resistance across here. We ended up pushing through it. And where does it find its ultimate resistance? Right up here. I always start with the overnight highs and lows. I started with this one here. And generally, you want to move your line to where you get the most touches using the closes as well. And that tends to be right along this 20.3375 for the lows and 20.4375 for the highs. Um, but we did have a bunch of turns right across here. So this level was important for, uh, really it started about here. So when we came back to it, it was important again. But notice how we didn't make it to the low this time and we pushed higher. So when we started going higher here, you would have wanted to measure that leg. And that's all one leg, that move up, and then this is a leg down, and there's multiple legs within that leg. But and you want to look for a measured move, and you can see we got within a tick of that, so that would have given you a nice target on the way back up here. So always use those measured legs, or measure those legs and look for your measured move. But let me back out just a little more. But you can see this just a range day, really, from 2034 to 20, about a 10-point range, which is not huge, but it's not small either. 10 points gives you enough room to be able to uh, find a trend within the range. So, and once you get a trend, you want to try to stay with the trend. Notice that I've got the shorter term trend lines in here as well too, and you really need to use those on these days. So, but let's back out, talk about the trades, and probably won't take long today. First trade I saw was this trade right here, and I meant to change this one to green. Um, it's real borderline. It could actually be red. It's a nice bearish move, but notice you got this trend moving up. You do have a close outside of it here, but I would have figured we would bounce and test that high again before going to the lows, but we didn't. And notice how we push on through the EMA and we kind of get a point or so below it and then pull back. And even though this looks like a doji, it closes way down here, one tick off the low. So that's really a bearish bar. Um, and so you would expect prices to probably try to test this low maybe before they go up to test this high if they're going to, and they do. They end up heading for another leg down. So once we headed down, same thing, measure that leg and look for something similar to happen on the way down. And again, we missed it by basically a tick there, and that would have given you a nice target on the way down. But On this particular level, this is a second entry short. It's a fairly bearish bar. And it's a second entry counting off the high. It's not a second entry counting from the lows. It's just a first entry. Notice it pulls back, and that's the first move down, so it's the first entry. But there's two hidden legs in here, and so there's some reasons to even think about going long here if you didn't have this trend line in the way and you had a nice setup. But so this is a little iffy right in here. But the fact that we had this big, huge move down, pushed through the EMA, pulled back, and then turned down again, you probably want to consider that for a short. Because even if we're not going all the way this low, we're probably going to turn down here and test this low, and there's enough room to scalp out there and then maybe push up. But we did have this break here in the overnight. But a lot of times when you get a break in the overnight, you just almost have to ignore it. But this was still during the overnight. So in that case, I would probably treat this like a low, and that kind of adds to this short as well versus going long. So I hope that made sense. I don't want to make it too complicated and confuse the newer people, because a lot of times when I start talking stuff that's a little bit more advanced, it confuses people more than it helps them. But if it doesn't make sense, don't beat yourself up over it. You probably wouldn't want to take that trade anyway. Um, and again, it's borderline red. It could almost be red, but I'm going to mark it green because it's a little more advanced. So it's a little more aggressive trade. But then guess what? We bounced right down here where we had some previous support and resistance here. And notice what happens. You make the low, pull back first entry, pull back second entry. You get a second entry short right off the EMA that fails. That's that reversal pattern. Take that to the long side. Plus you got your trend line working up through here. You finally get a close outside of it here, and you push to a new high. But this is a breakout pullback long, and I still like this trade because of all those matching highs across there. And we broke out the bottom, then we broke out the top, we pulled back. That's not a perfect bar, but it is. It's right off that trend line, and we aren't back up here to test this high yet. And we're probably going to here. That's where at this point I would assume we're headed is back to this high, overnight high. We don't get there, but at that point you got to assume that, and you want to play it with that mindset. You get another similar setup here, but the fact we didn't take on off, and you got that resistance, that's really a double top almost right across there. So I'm more leery about this one than I was this one, because I would have really thought it would take off. So you just kind of got to wait. You get a second entry long here, but that's right into that high, and you've got a break now. So you expect it's probably just going to barely go up and then come back down. You might have treated this one like a failed second entry short, but again, now you got a double top there. And so I'd sit here and hope that maybe you get something different. See if maybe you get a long trap, and if it goes on without you, you just leave it. But guess what? What does it do? It goes right to that high, it breaks right one tick above that one, and it traps people and turns down. I like just having to stop there because of the trap. But you could have waited on you could have waited on this bar and waited on a break below it and then dropped a limit order in there to see if you'd got filled. I doubt you would have. You might have got filled back where the original stop would go, which is where you got to try to enter. You don't want to enter. Somebody asked me that today. You can't start chasing these trades, even though it keeps going lower here. You can't start entering down here, because too many times you'll enter and it'll back right up and stop you out, and then end up going right where you like it. But anyway, I like this for a little bit of aggressive setup. It's a double top. It's like the double test of this area right here. It's a failed second entry long. There's strong resistance across there. There's a couple reasons I like that one, but I do still think that one needs to be green, unfortunately. And notice how it shoots right through the EMA. That's a sure sign that the market's reversed. And at that point, you figure, hey, we're probably headed down here, back to the lows. And you get a little break higher here, right off that trend line. You don't really have a whole lot of information. Notice how this is fitting real nicely down along these bottoms, and if you drag it up here at the top, it fits really well. If you know how to do that and you've been following this long enough, that's probably a great place to go short. I am going to mark it aggressive because it is a little bit aggressive because it's just a first entry. You got to go short right into the previous low. Uh, but there's some reasons to really like that one if you see the bigger picture and want to be a little more aggressive. And you actually get another chance to enter here, but this is a good example. If you'd have went short right there, thinking that we're headed here, notice what, it only goes a few ticks and it bounces and you get stopped out. So that's why I try to tell you to follow the rules on this stuff. But just because it works one time doesn't mean it'll work every time. But now you got to break a new low, and now we're headed higher. You get it doesn't go very far before you've already got a close outside and a push to a new high. And there's no short setup until it tries to go higher again and makes that double top, and you got a little trap right there. And so I like going short right there. And look at it, how quick it drops down and makes another and tests that low again. That's a nice little trap. And you know it was a good trap by how quickly it shot down. And again, there's a second entry short right here, but notice what's going on. You got this little channel working up, and that's right into that trend line. And if you'd have gone short there, you'd have got burned on that second entry short. But the real key is you've already got a break here at a new low, and you're kind of pushing in the other way. So you might get a reversal here. So you got to be real careful. Instead, you get a long trap and a chance to go short. And then it bounces. Where does it bounce? Right at that previous low. And look how far away we are from the EMA. If you want to be aggressive, that's a nice one to take. And then you get a higher low here with another. It traded real bearish and ended up closing almost on its very high. So, and there's still a little room in there. It's still a little. This one's closer to being blue than this one to me because you're fairly close to the EMA. Although you do have a break here and a sure new low, but sometimes you get two legs down. So you got to be a little careful going long right here, but you got that support behind you and you got a higher low here. So I like both of those being a little more aggressive. And notice what does happen. You do get another measured leg here. This one's a little different, but it's still the same thing. There's your first leg down, and there's your second one. It did go a little further, but what I think they were doing, or they were testing this low. And of course, this is why we don't go short on these breakouts the way most people teach. Look what happens, it fails. I like going long right there because now you've got some evidence here that, hey, there's some support here. And when this one fails and you get this little bearish reversal, again, it looks similar to a doji, but look how it's one tick off its high. Look how far away we are from the EMA. Same thing here. Just go long right there. And now you got enough evidence on this one to just take that one straight up, in my opinion, because you've got the break here. And plus you've got a lot more evidence that, hey, this is indeed a range day. And generally 9 times out of 10, this is at least coming back to the EMA. And 7 out of 10 times it's headed back to this high. So that's a high probability trade. And this one's supposed to be blue, and I forgot to change back. And notice what happens. You have your new low, you pull back first entry, pull back second entry, it fails right there. And again, you got a bullish reversal type bar, go long right there. It takes this one a minute to get going. And this is, I get this question a lot. I know we've talked about it in the manual some. It's written that about tightening your stop, but I've over time I've learned that you're better off not to do that, because what'll happen is you'll enter here and you'll move your stop up to here, and then you'll move it up to here, and you don't quite scalp out, and then it backs up and stops you out, and then goes exactly where you thought it was going to go. If you're really good at reading things, I just don't think you should change your stop. It should always stay where it's supposed to go. And if you think you got trapped and you're completely wrong, just hit the close button and exit rather than letting it take your stop out, or rather than tightening your stop. So just be careful about hitting the close button as well, because you'll cheat yourself and fool yourself. And if you're sim trading, let every trade play out. Don't ever close one early, because you want to go back and study it, and you'll be surprised at how many times you would have probably closed a trade only to find out you were right about it. So if you're sim trading, don't ever close a trade early. Just let them all play out and then worry about it at the end of the day. But yeah, I like going long on both of these. And turns out to be, if you caught this one, you could ride this one all the way up to the other side. Um, we did push on through here. We pulled back and we tested, but that bar is so bearish. And it looked like this was the channel here. So it looks like you've got a break. So I wasn't crazy about going long there. I think you got to skip that one. Turns out I think this is a two-tiered channel. Maybe it's not, but it looks like it probably is because we bounced off of it again right here. Um, but you really don't get a chance to get long on this one. It just rockets on off. It pulls back here. And again, it's not a very good setup. And you're a good bit away from the EMA, so you want to skip that one. And we just kind of start going sideways here. But notice what happens here. Notice you got that double top right there. And you get that little trap, that little break higher, and it turns down. But also, there's actually a failed second entry long here, but you don't want to go short right into that double bottom. But when we double tested it now, we had that earlier over here. It's kind of a repeat pattern to that right there. And it went out the top and turns and goes down. Just go short right there. Quick, easy move. And that sets your trend line. Then you get a two-legged correction back to that trend line. This confirms it. You get another second entry short with a relatively bearish bar. It didn't close exactly on its low, but that's a fairly bearish bar. And notice it's almost a repeat pattern of this again. So you get that pattern again. All those matching highs and the failed break higher. I like going short there. And you figure we're headed down to here. And if you do this trend line off these first few bars here, first couple of closes, then you might have already had this trend line in place. Maybe you did, maybe you didn't. But anyway, then you get another second entry short right here. And again, it's almost like three repeat patterns stepping down. And if you draw this, you can see the resistance right there in the failed breakout. It's a second entry. Notice the new low, pull back first entry, pull back second entry. And it broke higher and turned and went right out the other side. I like just having a stop there ready to go. And even if you drew this trend line, you still got room to get out there if you enter where you're supposed to enter right there. And I think even if you entered here, you probably would have got out of that trade. But I wouldn't enter that far down, I don't think, that close to the low. Especially not with a break there. You figure you're going to make a new low. So, but you don't always. Even with the trend line in place, you still made a new low and it closed inside it. So your trend line's still valid. And this pretty much confirmed that trend line. And so you might have considered entering here, but still underneath the EMA, I would wait and see if you don't get at least a push through and a pullback to it. And then you do, you actually get a second entry long here. Notice the new high, pull back first entry, pull back, and there's a second entry. I would have liked it even better if we made a new low here, but we didn't. But it still makes a lower high, and that's basically a second entry long. And we look how we push through the EMA, we pull back and test it. We test it again, and we test it a third time and takes off. You want to go long there. And you did confirm your trend line here, so you're just looking for a reason to get long, and there it is. And so it pushes on up, and where we headed? We're headed to the upper side of that channel. And we're pushing down. It's tempting to go long here, but I don't like that signal bar. It's a second entry long. You're looking for a retest of this high, but that is so neutral. But what I would probably do is make it green, and I want to explain it before explain what it is. It's a second entry long. Notice your new high, pull back first entry, pull back second entry. If this would have been a nice bearish bar, I would have been all over that. But because it is a neutral type bar, doji, and you got a little resistance right across here, I think it's got to be a little more aggressive. You got to consider it a little more aggressive. So I'm only willing to make it green at this point. But you're looking for prices to test this high. And but you got to remember this resistance was across here, so it's like a little breakout pullback long to a degree as well. But yeah, it's a second entry long. You're looking for a retest of the high. Prices may even be headed up to here now. You're looking for the measured move that I told you about. We don't quite have that in place yet. So there's some reasons to consider that one. And unfortunately, the rest of the day, really from 1 o'clock to 2 o'clock, you don't want to enter in that stuff right there. You might have taken this short right here because this is definitely congestion, which is just a smaller trading range. And you got that failed breakout um, of the top. So maybe right there you consider a short. Plus it's off the upper trend line. So, but I'm going to make it green for sure. And then you definitely don't want to enter after that. So possibly a green right there. But for the most part, I just stay out of that stuff for that late in the day. Because you don't want to get chopped up in that and end up with a loser when it's too late to get it back. So yeah, just a range day. Nothing spectacular to talk about. A lot of green ones in here today. Really, there's only 1, 2, 3, 4, 5, 6, 7, 8, 9. Really only about 9 trades that I would say are, sure thing blue or red trades. The rest of them are a little bit more aggressive. Um, just it's kind of a slow day. It's kind of a slow range day, and the market has been slowing down a little bit lately. It was so fast for so long, it seems incredibly slow now. But this is still really not that slow. Even though it's slower than normal, it's not super slow. I mean, I've seen it a lot slower than this in the past. So um, if you really feel like it's too slow and you're reading it really easily and reading it well, you could drop down to maybe try a 1500 tick, or if you're trading a volume chart, maybe go to a 5800, 5500 and see what you think. But just be careful with that because even though it speeds it up, that's not what we necessarily want. We want the market to move along at a comfortable speed that there's enough trades, but we also need time to read it properly. And you don't want to make it too small because when you get moved down to too small a charts, you get more failures. And you don't want what looks like nice trades failing on you because you're at too small a time frame. So I wouldn't go much smaller than what I just mentioned, maybe a 1500 tick chart or maybe a 58 to 5500 volume chart. If you have to get any smaller than that, you're better off just to stay with that particular chart and just take less trades and wait on the really good trades. So, but anyway, I'm going to wrap it up for the day. We'll be back again to do it tomorrow. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.